It's great to have you on the show today. Thank you for joining us. I want to get
good afternoon.
The gist from how the market has rebounded after sliding over the last two sessions. And many people have predicted this, though. I must note that a lot of people thought that the market was bound to bounce back after giving up some profits recently.
Yeah, yesterday we witnessed a downturn in the market, and it was quite expected. And while the market was going on yesterday, the practicum of the market-making process, which is going to commence next week, was going on at the Muson Center. And it was a high expectation that this is going to spell a good thing for the market. Today, we saw the market going up, the index going up by about 1.1%, and the market capitalization at about 7.836 trillion. And the volume done today was quite high, up close to about 750 million shares. Largely because of the shares of Cornerstone Insurance. In that stock, in the insurance sector, which the Cornerstone represents, a total volume of 550 million was traded, and the volume was quite substantial at about 3.23 billion total for the market today. So today is quite a good thing, and there is a high expectation that this is just the beginning of a new era.
All right, and we look forward to that. Now, that Cornerstone Insurance trade clearly standing out. I did also note that Zenith Bank also did quite substantial volumes today. But let's move on to Dangote Flour. I heard that they released results today, and can you give us a sense of how the market reacted to that?
Yeah, the market reaction was, because for now, for quite a while, the market has been, for that particular stock, the price has been going up. But today, it didn't really translate to the kind of expectation, although there was still a positive trend in the market for Dangote Flour today. There was slight apathy concerning the stock with respect to the result.
Right, so you think that the result was already priced in, and so the market really didn't react to it?
Yes.
Okay. All right, let's move on to the impact of what you discussed just now, the workshop that the NSE hosted. And of course, a lot of people are expecting market making to take off next week. Your thoughts on the impact it's having on the bull run? Because, like I mentioned, many people had predicted that we would see this market bounce back, and some are already pointing to the fact that the start of market making will be the key driver of the market this week.
I think, practically speaking, one thing we need to look at first is the issue of confidence in the market. What has actually brought down the market for so long a while is because there is lack of confidence.
Right.
And investors believe strongly that with the takeoff of the market making by the 10 market makers, they believe that at least in a certain way, to a good measure, there's going to be stability in the market. So the kind of bear run that we usually have after a slight peak of the market is not going to be again. So people are believing that, yes, this time around, things are going to change. And a lot of investors have begun to start positioning themselves for this good thing that is going to come to the market. So maybe looking at what may happen next week is going to be significant in the sense that certain dynamics in the market are going to change. First, the market making is going to start. Secondly, the price band is going to move from 5% to 10%. And thirdly, for the high cap stocks, we're going to have a situation whereby a volume of 10,000 instead of the usual 50,000 is going to be enough to move their price from either upward or downwards. So there's a high expectation about the market, and we believe that things have definitely come back, and things are going to change for better.
Well, it's certainly sounding exciting, but let's look a bit forward. We know Guinness Nigeria is one of the companies that are likely to release results later this week. Can you give me a perspective on the impact of this whole market-making dynamic on a stock like Guinness, for instance?
Guinness, for instance, and also coupled with other high-cap stocks. People believe that the chunk of the shares of this company are in the hands of the institutional investors. And the institutional investors are the ones that have more interest, in the sense that each, maybe for month end and periodically and yearly, they need to balance their portfolio and see that they are performing. So invariably in this respect, what we see normally is that these ICAS stocks, the numbers of shares in them are limited in the hands of those who trade regularly. So the float in the market is very little. So invariably, what we're going to see is that when the market making process starts, these stocks are going to be the one that will stabilize the market, and also they may most likely be the stocks that will be used as collateral to lend other stocks from security lending agents that are going to be introduced in the market next week.
Can you share a thought on the support that you think market making will provide for this bull run? I think, of course, like you mentioned earlier, the concern of many investors has been the stability of the market. But now that investors would have the opportunity to lend their securities to the market or to market makers, give us a perspective on to what extent you think this will stabilize the market broadly.
Yes, the market will no doubt be stabilized by the efforts and activities of the market makers. The reason for that is that their entire assignment is to ensure that whenever there is a glut of the shares of a particular company in the on the floor of the Nigerian Stock Exchange, what they're supposed to do basically is to mop up those shares to a certain level, not necessarily creating another bull run for that stock. And also when there is scarcity of those stocks in the markets, what they are supposed to do also, from the securities that they will have lent from the security lending agents, what they will do is to supply the market so as to maintain a reasonable equilibrium from time to time in the market. So if this happens, then definitely people usually believe that as we have been having in the past, whereby investors, once there is a bear run in the market, everything continually goes down. But this time around, with the efforts of the activities of the market makers, it's going to be a different ballgame entirely. So they will always be there to give support to the market, preventing unnecessary bull run or bear run.
Well, clearly we'll continue to talk about this at least until we see market making launch next week. Thank you so much, Rotimi, for joining us on the show. Rotimi Fakayejo, Managing Director at Enterprise Capital.